Welcome to Brokers Digest, a weekly webcast by The Edge Singapore, where we discover stock opportunities with you. This episode is made possible by TD Ameritrade Singapore.
Hello and welcome to another episode of The Edge Singapore's Brokers Digest with me, Amala Balakrishna. Joining me today is Leonard Ng, Manager for the Trade Desk of TD Ameritrade Singapore. Hi Leonard, welcome to the show.
Hi Amala, thanks for having me.
Well, Leonard, we have an exciting session today on retail stocks, which is rather timely since last Wednesday, the 11th of November, was Singles Day, which happens to be one of the biggest days in the Asian shopping calendar. Alibaba has set a record high of US $70 billion in sales following the discounts which kicked off on the 1st of November. So, Leonard, did you manage to get yourself some steals during the sales?
Right, I did try, but then I couldn't make it for the discounts, but so no, I didn't get any.
Oh, well, okay then. But do you reckon that Alibaba is a steal to watch, as market watchers are saying, since the counter closed down about 0.26% on the New York Stock Exchange on Friday, November 13th? I believe it's following the Chinese government's proposal of new antitrust regulations.
Well, Alibaba is still a watch because of the scale of the business. So they still hold a sizable chunk of China e-commerce market. And then not just that, I think over Southeast Asia, they are reaching out through Lazada. And then that's where they can capture a chunk of the Southeast Asian market. So by sheer size, yes, keep watching Alibaba from there.
Okay, so we are heading into the thick of the shopping season with Thanksgiving, Black Friday, Cyber Monday, and Christmas just around the corner. So, Leonard, do you reckon sales from e commerce players would be the ones to watch this year, especially since online shopping has accelerated significantly since the onset of COVID-19, as we see in the chart here?
Yes, so you can see there's increased projections across the e-commerce space, especially with Amazon. They are the biggest, the giant in the e-commerce space in the US. So they hold 38% of uh, the market share of e-commerce, retail e-commerce in the US. So let me quote something that I see across the from Amazon CFO Ozovsky. So the massive increase in consumers buying more goods via Amazon, actually they made up more than proportion of the expenses incurred by Amazon. So the expenses incurred by Amazon is to actually show up the safety of the stuff. Of course, increased purchase of the PPE, more staff safety protocols they implemented, but then the sales itself says the best. So the chief financial officer of Amazon mentioned that online grocery sales tripled year over year in the latest quarter from an unspecified number, and that customers of Amazon's Prime, which is their paid subscription service, are shopping more often. Not just more often, more frequent, and then with a larger basket sizes since they can't really visit a physical mall. So that you can say that Amazon itself or the Amazon is like a proxy for the e-commerce space. So it is going to go up eventually, and then with the COVID-19, the growth accelerated and exploded from there.
Well, Lennon, actually, Amazon is a company that we have had on our radar for over a month now. So, from what you're saying, it seems that this is a counter that our viewers should continue looking at in the coming weeks ahead. So, what other counters do you think they can possibly window shop in the next few weeks?
Window shop wise, if you want to add on to your watch list, you can look for, I think, competitors. Walmart is, as you can see, in this top 10 companies in the US ranked by e-commerce retail sales. Walmart is seriously uh, competing with Amazon for the top positions. They have been making some acquisitions over the past few months to increase their IT capabilities, to increase their logistical efficiencies from there. So that is where you can take a look. So Walmart is a very close contender. For the rest of the symbols or the companies that you see over here, they're mainly and still largely physical in-person type of sales distribution channel. So Walmart is the one that you can try to keep an eye out for.
Another arm of retail comes from shopping at physical stores. So, market watchers are saying that several of these brick and mortar stores may have to contend with higher expenses, especially if the Biden administration lifts the minimum wage to 15 US dollars from the current 7.25 US dollars that it's at. So, please break down what this means, Leonard.
So actually, the median wage for retail stuffing is around $12. So with Biden coming at $15, is a marginal change unless you work for very, very long hours and accumulate a big difference. But actually, wages are not really the main concern of shop owners in the US. The key, the pie, the largest pie portion of the whole expenses overhead for shop owners will be rental. So the retail, I will shift the focus to the retail property sector. It is pressured by the ongoing rise in e-commerce, as seen in the results of Amazon. Even before COVID-19, the crisis, it is now burdened with wide-scale store closures and is expected to be affected even worse. So, as compiled and forecasted by Moody's Analytics Real Estate Information Services Group, so this bunch of people, they are analyzing the whole real estate situation in the US. Uh, they are saying that the national vacancies will rise past historic highs with effective rents projected to fall by 11% this year in 2020. So this drop will constitute almost twice the total decline in rents the retail property sector have experienced after the Great Recession in 4 years spanning from '08 to 11. So during '08 to 11, that means this drop will be twice of that, of the drop in '08 to 11. So, and the head of that department also mentioned store closures have made it difficult for retail tenants to pay rent. So, which has negatively impacted the landlords. So, this is the trickle-down effect that you see from difficulty of getting retail sales, in-person sales, to difficulty in paying the rent, and then this also implicated the landlords saying that, hey, we need money, but the money is not there. So it is also not clear yet with the new Biden administration on how effective is their governmental support for this sector.
This sounds painfully difficult for physical stores, Leonard. So, how do you reckon it will affect sales, particularly at the bigger department stores such as CVS and Rite Aid? Would you go so far as to say that apart from shopping at their stores, we should shop at their counters too to support them?
Well, I think there is limited extent of the retail consumers in opening their purse strings, especially in times like this, where I see an inverse. There's high savings rate during this time of fear. So in fact, the other way around, the Simon Property Group. So this is the largest owner of operator of malls in the U.S. They are in talks with Amazon. So what this retail mall owners that they are doing, they are pivoting the whole objective of repurposing some of their space. So sometimes, like we see, even in Singapore, metro closes, the shopping center that closed to. So it is the same thing in the US that these struggling retail tenants are transforming wise the whole agenda of their business into distribution and fulfillment centers. So this is where e-commerce steps in, and then the behemoth behind e-commerce, which is Amazon, basically, they are converting some sites of these failed malls in some parts of the US into fulfillment centers. So the e-commerce giant continues to perform well, as seen in their sales, doubling their profits year on year to 5.2 billion in the second quarter, despite the worst contraction ever experienced in the US. So as you can see, the pivoting does, if the retail consumers don't step in to extend the hand or is inadequate enough, the mall owners will have to come up with something creative to get the business going.
Yes. So, let's now take a step from shopping and see how the markets have performed in the past week following news on Biden becoming the next US president. So the 30 stock Dow Jones Index was up 4.1% for the week ended Friday 13th November, while the S&P 500 jumped up by 2.16%. However, the tech-heavy Nasdaq lost 0.6% this week, notching its third weekly loss in 4 weeks. Well, Leonard, volatility in the markets has arguably been the only constant in the past few weeks. So does this performance take you by surprise?
Well, not really. So with volatility, it means there is like sensitivity in the market. So combined with the bad results, I think some of the firms are performing, but at the same time, when this drags down the whole the sector or the market itself, it also presents some of the opportunities for certain investors to step in and pick up bargains. So it is a game that is played both ways, and depending on your outlook and your investment objective, you can position for either better or for worse from there.
So, Leonard, you mentioned opportunities. So, at this point, I think it's timely for us to touch upon the results of TD Ameritrade's Investor Movement Index, or the IMX in short, for October, which we have here. So, could you take us through this chart, please, Leonard?
So you can see the rightmost corner of the chart itself, there is a decline. So the decline is quite similar to the September 17 slight decline that you see over there. So that is where the brief decline, I would say, could be the market waiting for clarity. So this is being pulled before the just concluded U.S. elections. So we don't know if Trump or Biden will win when the results are tallied. And then this shows that the investors could be waiting on the sidelines and taking a pause while waiting for clarity to open up from there.
Right. Okay. So, to our viewers, the IMX is TD Ameritrade's proprietary and behavior-based index, which aggregates the investor positions of the Main Street or retail investors to measure what they are doing and how they are positioned in the markets. So, what counters do you actually see clients scooping up, Leonard, based on the IMX results?
Right. So based on the IMX movement, the investor movement index that we see, TD Ameritrade clients were net buyers overall. So in fact, they are net buyers of equities during this period, even though there's a slight decline. They prefer consumer discretionary stocks, information technology stocks, and finally energy stocks. So the popular symbols that I see would be Apple, Tesla, and surprisingly AT&T. So these are the popular ones that I see being net bought by TD Ameritrade clients.
So actually, I believe that Apple and Tesla is rather consistent with the interest seen in previous months. So it's interesting that you mentioned AT&T, which has featured prominently this time around. So why do you think this is so, Leonard?
So that was a very good observation, Amala. So that's very good. TD Ameritrade clients were also net buyers of AT&T. So AT&T is one of the largest telco or telecommunications service provider in the US. So it's something like Singtel in Singapore equivalent. So it's quite large and established. So it traded lower during that period. So after missing on earnings, so it is actually nearing the 52-week low. And then this presents an opportunity from the drop in share price. Why? Because of the increase in dividend yield to above 7.5%. So which is a very attractive yield given a very defensive stock like a telco company. So this is where the opportunistic buying comes in. And then it is also seen as essential during this time of COVID, where everybody or most people are working from home. And then that also contributed to the connection resiliency. So that's a keyword, connection resiliency, where people are working from home during this time and is a norm during the current third wave that is happening in the US.
Right, Leonard. Connection resiliency, that's a new word for me here today. So, before we end today's discussion, do you have any tips for our viewers as they trade in the next few weeks? And as we see here, the COVID cases are increasing, so what can they actually expect, and how do you see the markets performing in the next few weeks?
Right. So you can see the first wave happened in April, and then the second wave the peak happened in July, and then the third one is happening now. So in fact, this is what I will see coming up will be more volatility coming in, and then stocks that seem very distant. That means there is not really correlated to the COVID-19 vaccines that are being introduced. They are somehow correlated and being impacted by the results of the vaccines. So vaccines are key that is coming out with Pfizer coming out, just came out with a 90% effective vaccine. So that is where not just companies rejoice, not just investors rejoice, countries rejoice also, and trying to get the best for their people. So that have a lot of volatility to stocks like aviation, like the like even retail malls. So things that seem very distant and not affected by all. With the vaccine results coming in, I see a lot of volatility too.
Right. So, with that, we have come to the end of this week's Brokers Digest. Thank you, Leonard, for giving us some stock therapy with your tips on counters, especially in the retail sector, to keep a watch on. To our viewers, we hope these strategies help you in your investment decisions in the short and medium term. For more analysis on the stock market, you can visit TD Ameritrade's Education Center or the Edge Singapore website. You can also check out the Edge's cover story for this week titled Seeking Highs in the Retail Lows for analysis on Singapore's retail sector. Do like us on Facebook and Instagram to be alerted on next week's episode. We will be uncovering more insightful investment tips that you won't want to miss. You can also leave us a comment below if there are any questions or topics you would like for us to discuss. I'm Amala Balakrishna. With me is Leonard Ng, and we'll see you again next week. Take care. Goodbye.
Bye bye.